One Up on Wall Street is a popular investment book written by Peter Lynch, a renowned American investor and former fund manager of the Magellan Fund at Fidelity Investments. First published in 1989, the book offers valuable insights and strategies for individual investors seeking to achieve success in the stock market. Lynch's approach in One Up on Wall Street revolves around the idea that ordinary individuals can outperform professional money managers and Wall Street experts by using their everyday knowledge and observations to identify promising investment opportunities. He encourages readers to apply a common-sense approach to investing and emphasizes the importance of conducting thorough research and due diligence. The book begins by debunking common myths about investing and provides an overview of the stock market. Lynch then introduces his investment philosophy, which is centered on the concept of investing in what you know. He believes that individual investors have an advantage over institutional investors because they can leverage their personal experiences, observations, and understanding of everyday consumer trends to uncover undervalued companies. Lynch outlines various investment strategies and provides practical advice on how to identify promising stocks, including tips on analyzing financial statements, evaluating management teams, and understanding industry dynamics. He shares his own experiences and success stories, emphasizing the importance of patience, discipline, and a long-term investment horizon. The book also emphasizes the significance of conducting thorough research and staying informed about the companies in which one invests. Lynch advises investors to focus on their own investments rather than being swayed by market fluctuations or short-term trends. He encourages readers to have confidence in their own judgment and to develop a well-rounded portfolio of stocks that align with their investment goals and risk tolerance. One Up on Wall Street has become a classic in the field of investing and has inspired many individuals to take charge of their financial future. Its practical insights, relatable anecdotes, and straightforward advice make it accessible to both novice and experienced investors alike. By empowering readers to trust their own abilities and tap into their unique knowledge, the book aims to help them achieve success in the stock market. The making of a stock picker. Main idea. Investing in stocks can often be a daunting prospect for individuals, especially those without a finance background. Many shy away from the investment business, believing it to be reserved for the financially astute. In this enlightening book, The Making of a Stock Picker, Peter Lynch shatters common misconceptions surrounding the prerequisites and qualifications necessary to engage in the stock market. Lynch presents a refreshing perspective, empowering readers to realize that anyone, regardless of their background, can become a successful investor. Throughout the chapters, he provides invaluable insights and practical advice, debunking myths and demystifying the world of stock trading. By the end of this transformative journey, readers will be equipped with the knowledge and confidence to take control of their financial future and embrace the exciting world of stock investing. Story. If you believe that a degree in finance is a prerequisite for successful investing, think again. Even without any background in finance, you can still thrive in the investment world. I am a living example of this fact, having emerged as the top-performing mutual fund manager globally. Born on January 19, 1944, I hail from a family that experienced the hardships of the Great Depression. Consequently, my family held a deep mistrust of the stock market. The only investment story I had heard was that of my grandfather, Gene Griffin, who had invested in what he believed to be a water utility called Cities Service. However, he soon discovered that Cities Service was actually an oil company. Fearing the unknown, he swiftly sold his shares, only to witness Cities Service skyrocket 50-fold shortly thereafter. This cautious attitude toward the stock market was not unique to my grandfather but rather a prevailing sentiment among most Americans in the 1950s. The general belief was that investing in stocks would inevitably lead to losses. Thus, my childhood was far removed from the world of stock trading. It revolved around overcoming personal adversity as my father succumbed to brain cancer when I was only 10. With my mother assuming the role of breadwinner, I also took on part-time work as a caddy, a job that proved lucrative and allowed me to interact with influential individuals such as presidents and CEOs of major corporations. It was during this time that I realized the stock market wasn't as daunting as it seemed. Many of my clients were investing and reaping profits. Throughout high school, I continued to work as a caddy to support myself. While my peers focused on science and mathematics, I gravitated toward the arts, actively avoiding subjects like math, accounting, and business. Little did I know that these seemingly unrelated subjects would provide me with valuable insights into the stock market. I firmly believe that investing is an art rather than a science, and my unconventional educational path ultimately prepared me better than statistics ever could. In 1963, I took the plunge and purchased my first stock, Flying Tiger Airlines, at a price of $7 per share. However, my decision wasn't arbitrary. It was based on an article one read, highlighting the promising future of air freight companies. Yet, it was not my astute analysis that drove the stock's ascent. Rather, the Vietnam War and the influx of cargo in the Pacific region were the catalysts behind its rise. I was fortunate to profit from this investment solely due to luck. While studying at Boston College, I landed a summer job at Fidelity, a prestigious financial institution. Despite lacking any prior professional experience, I was assigned the task of researching companies and writing reports. However, upon returning to Wharton for my second year of college, I realized that the theories and teachings I encountered were of little practical value. The emphasis on statistics and advanced calculus fell short in the real world. This revelation came to me as I compared the success of my professors at Wharton with that of my colleagues at Fidelity. The teachings imparted at college seemed disconnected from the realities of the stock market. As I continued working in the stock market, my portfolio flourished. At one point, I held a staggering 150 savings and loan stocks alone. So, if you believe that qualifications or the advice of so-called experts are necessary prerequisites for investing, know that you possess the potential to become an expert yourself.